Obviously, there's still a much more important, I suppose, overall sentiment is so much greater than what the ECB can do in the short term. What we know is that there's a continuing issue with the cost of doing business in these indebted nations, such as Portugal, has continued to rise, and of course that will not bode well and will likely manifest in the euro price action in the longer term. At this point, you know, from time to time, we do see a little bit of relief, a bit of a reprieve, you could say, from these debt yields. But overall, you know, a little bit of buying by the ECB in the long term won't be the panacea needed for to get Portugal and some of these nations out of the economic hole they're in.
So, on what basis is it the case that Europe sees itself out in front on the rate hiking path, as it were? Because, you know, put Germany to one side, okay, UK is looking at inflationary issues, but who else, pray tell, to justify, you know, a unified clamping down on the inflation genie?
Well, this conjecture started, excuse me, there's a fly. This conjecture, of course, started when we have the ECB themselves suggesting that they're willing to step in and moderate interest rates or moderate inflation with some increases in interest rates, and this, of course, has led to speculation. It's a snowball effect, and we'll continue to see such talk. But if you look at the finer points of what we see from the ECB, it's always that they're happy to step in if required. And from time to time, we also see some rhetoric from them in terms of, you know, we may not at this point, we're not committing to raise interest rates. But importantly, I think that what we're seeing is a lot of speculative buying of this euro. So relating it back to euro price activity, one may suggest that it's built on a fairly weak foundation, and at this point, we probably shouldn't be placing too much focus onto the ECB raising interest rates in the near term.
All right, bring it all back home then, Chris, if you could, and the relative resilience of the A dollar holding still around the 101 mark, 101 and a quarter. So, alongside you know, central bank comments from last week here, what's going to give it the next leg up?
Well, certainly risk trends from abroad, that's the most important thing. The Aussie dollar going forward this week is highly contingent on what happens in the US. We know that this week, the week ahead, we have very little in terms of market-moving data for the Australian dollar. So we'll be looking closely at how investors react to the economic information and feedback coming from the US. Importantly, a continuing theme will also be this civil unrest coming from the Middle East. And this may not see the US dollar receive or become the beneficiary of these concerns like we have in the past. Of course, the more we see, or the more this problem escalates in the Middle East, we may very well see the US needing to step in, and of course the UK needing to step in. And history shows that won't bode well for their currency. So importantly, what we'd be looking for is these risk trends abroad. In terms of the Australian dollar, as we saw last time when the Egypt issues were in full flight, the Australian dollar was fairly resilient, and we expect this to be the case. We expect it to be a continuing theme. We may have our dips in price action, and we could very well see a comeback below that parity mark once again, but the theme continues to be strength. And until we see the US can come out with a sustained positive economic feedback, slowly that will bode well for the US dollar. But until we see that happen, and that the missing link in the US recovery, which is jobs, come back to the forefront, essentially the Australian dollar is, we believe, will spend some time and has a home above parity in the near term, at least for the next 3 months or so.
These events, therefore, in the Middle East, the latest being Libyan tribal chiefs telling Al Jazeera that they will stop exports of crude to Western countries inside 24 hours if the regime doesn't stop oppression. You don't see that as being quite a seismic threat and potentially destabilising confidence in a much bigger way than occurred in Egypt? Briefly.
Absolutely. Obviously, we'll see that resonate through commodity prices. how this actually affects. Remember when I was saying about the US dollar? Of course, that we don't yet have a full understanding of how this is going to affect the US dollar, in the sense that we've got oil prices continuing to go from strength to strength. Naturally, we generally see a little bit of weakness on the back of, or greenback weakness on the back of this strength in oil prices, and of course, the worse this issue escalates, the more important it may become for the US to step in, and that most likely will not bode well for the US dollar. We'll probably see a continuing theme of strength of gold and silver, and of course the Swiss franc, which has certainly been a standout